what did we take on? Like $7 or $8 trillion of new debt in the last few years?
At least.
Yeah. Yeah. And for no real apparent reason, we just did it. And we're not stopping, So this is the point at which we really lost control, which will destroy us financially at some point in the near future.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, John Rubino is with us now. John, hey, I'll just skip the niceties other than to tell you to go to rubino.substack.com and send any emails with questions, comments, kl@kerrylutz.com. We always want to know what you think. First story, headline, and this should be shouted from the rooftops. It's got to be a plus for the administration's somewhat lackluster economic policy. Hedge fund leader Bill Ackman sold his T-bond shorts, called the interest rate top, and rates fell hard to the point where we're no longer having an inverted yield curve. The Fed won.
Hey, Kerry. Well, it was a big day in bonds. I think it's maybe too soon to say the Fed won anything, but it was very interesting because the 10-year Treasury note yield, which is the most important interest rate, hit 5% for just like 15 seconds last week, and then it opened there again this morning. And when going from a 4 handle to a 5 handle, that's a big deal because markets like big round numbers. And right at the moment that the Treasury note was hitting 5%, Bill Ackman, like you said, who's a big hedge fund guy, came out and said, okay, we've been short bonds up till now, and we just closed them all out. Well, now we're not short bonds anymore. So you combine those two things, and interest rates plunged. The yield on the 10-year note went from 5 down to 480 something, which is a big move for a bond like that. So, the question is this the end for rising interest rates? Have we reached the terminal rate, which we, I kind of thought the terminal rate would be lower than this. So we're above what it seemed like the terminal rate should be. In other words, the point where things start to break. And so if they start heading back down now, that's a big deal for the economy, but we got to figure out why it's heading back down. If rates are falling because the economy is contracting, which I think is the case, then that just means we're heading into a recession. On the other hand, if it's falling because everybody suddenly has faith in the U.S. government's finances, that's a different thing. But I don't think that's
that would be the day.
We're going to run a deficit this year. That is the third highest, or we did already run it. We're right at the end of the fiscal year. So third highest on record we're not theoretically at war, although we kind of are behaving like we are. And there's no giant crisis out there or anything, which is normally why you run deficits this big. Excuse me.
Right.
Let me get a cup of tea. You ask another question while I'm having a drink of tea.
All right. So third largest deficit ever, right?
Yeah. Okay. That's a very big sign that we've just lost control. I mean, when government finances are that deeply in the red, and when there's no real reason for it, there's no giant crisis here. There's no more pandemic. There's not a recession. There's nothing like any of that. And yet we're running crisis level deficits, which in part explains why the economy hasn't tanked yet, because the government is creating all this new money and dumping it into the system.
Correct.
And it also implies that we have just basically lost it. We have given up any semblance of fiscal control. And we're just going to spend whatever we have to spend. Yeah. I think historians will look back on, there's a lot of things for them to look back on that they could call a big turning point. But I think the pandemic was one where we just let fly. We increased the money supply by 60%. We were running massive deficits. We took on, what did we take on? Like $7 or $8 trillion of new debt in the last few years?
At least.
Yeah. Yeah. And for no real apparent reason, we just did it. And we're not stopping. So this is the point at which we really lost control, which will destroy us financially at some point in the near future. That cliff was always out there. We were always going to walk off the cliff unless we changed something in a really positive way, in a really big way. But now we brought the cliff a lot closer. If we're at what, $34 trillion of debt,
How high can it go?
An interest rate, how high can it go, while we're having to borrow another $1 trillion on top of everything else to pay the interest on that debt, which means we got to have higher debt with higher interest going forward. We're in that kind of doom loop now. And it doesn't seem like there's any way out of it. We're just there until everything blows up. Yeah.
Is there any way?
No obvious way, because if you try to cut spending, you throw us into a really deep recession, because that kind of austerity, to get from a $1.7 trillion deficit to a balanced budget means we have to live on $1.7 trillion less every year, which is a big thing to ask an already stressed out populace. So that won't happen. So, and that's the only way you can do it. I mean, you can't, we could try to grow our way out of it, but we're already running massive deficits. What else can we do to grow?
Maybe get rid of some high tax states. I don't know, like basically fire the government. Is there any way of doing this? I don't see how we could ever get back to fiscal sanity. Although, what do you think fiscal sanity is at this point? Would it be just running a $500 billion deficit? Remember when we used to think that was a lot, John?
Yeah, we thought that was crisis level at one time in the not too distant future. Now, there's not really anything you can do when you're at this point, because, okay, here's your options. You could immediately go to a gold standard, just shut down, which basically shuts down government deficits and devalues the dollar really aggressively. But that impoverishes all the people who trusted the government. They'll go nuts. You can't have that. And you can't stop the government from being able to borrow money and create new currency, because that means they have to cut all that spending.
It would have to be a phase out or something, right?
But you can't phase your way into a gold standard, because everybody front runs it. So you have to announce it by surprise. That's the only way you can do a monetary reset. So that can't be done. And we can go to old style austerity, which people tried in the last 20 years, and it totally blew up in everybody's face, because the people who were being hurt by austerity, which is basically everybody that depends on the government for anything, voted out the people in charge and voted in people who promised to do away with austerity. So you can't do that in a democracy. So there really is nothing left. I mean, we basically just have to collapse, or the financial system has to have a gigantic crisis. And then the market has to impose austerity on everybody. In other words, we'll just reach a point where there's nothing else we can do. And all of a sudden, we're living within our means again, and our means are diminished at the same time. So that has to happen. And then, once the alternatives are all horrendous and going back to some kind of sound money is the least bad option, then they do it. But it won't happen.
I think you're right. I think you are correct about that it has to be the worst option except for all the rest, right? Because that's what it will be, right?
Yeah. It's when they look around, they think, okay, in this one option, I'm this generation's Herbert Hoover, and they'll know my name 100 years from now for bad reasons, and they'll kick me out of office right now and maybe hang me. And in the other option, we'll have 3% higher inflation next year. Well, they're going to choose the inflation every single time. And so each year, the inflation rate that they have to choose goes up and up until the financial system just spins out of control, because everybody starts front running inflation. In other words, they dump their dollars, they buy real stuff, the price of real stuff goes through the roof, which is to say the value of the dollar versus real things plunges, and then, then you're there. And so that's, those are our options, an immediate depression or a 5-year cycle of hyperinflation. And Neither one of those
Yeah.
sounds great, but if you're a politician, you will take that hyperinflation every day.
Yeah, well, hey, because you could just blame it on animal spirits or something, right, John?
You blame it on an external enemy, just like
Yeah,
they did this time. The Putin's
China.
inflation, yeah, the Russian gas increases. We'll just find somebody to blame,
Ugh,
and probably next time around it'll be China. So it'll be
yeah,
China's
right.
inflation, and yeah,
It'll be
yeah,
China
and
for sure.
yeah,
I mean,
and
what
then
else?
so then we
How else do
declare
you blame it?
war.
Yeah,
Yeah, and see,
absolutely.
war justifies unlimited deficits, and it justifies capital controls and price controls, and so
Mhm.
that way you blame it on somebody else, and that's your excuse to go authoritarian.
I love
And of course, from there, that's still a huge disaster waiting to happen. But
it.
it buys you, as the politician who becomes the dictator, it buys you some time,
God, are
and
we
time
like
is all you
totally
have.
screwed here?
Totally,
Are
totally
we
screwed.
totally screwed?
Yeah, yeah,
Ugh.
we are. We really are. Um, the best scenario here is that
Mm.
Sunday night announcement that we're back on the gold standard,
Yeah.
and it could be that there's like three farsighted people in the government, and they somehow gain control of the financial or the monetary system, and that they do that preemptively.
That's crazy.
Yeah, but that's the only way it happens. And even that's not pain free. I mean, if you bankrupt everybody who has a bank savings account or a bond mutual fund,
Yeah.
they're not going to be happy, and they'll hit the streets. So you still have to put up with
Yeah. Nobody's going to be
civil
happy
unrest
no
on a
matter
massive
what.
scale. Yeah. So
Right.
when you do that, you probably have to declare some kind of martial law, even after just the basic currency reset, at least
Mhm.
for a while. So yeah, it's when you go into a certain level of debt, all your options sound crazy like this, and that's just where we are.
Oh my God. Yeah, it really does sound crazy, but what else do we do? Right?
Mm,
What else can we do?
nothing. There's no way out of this. I mean, for the government, there's no way out of this. Of course, as individuals, we have all kinds of choices we can make,
Yeah. Yeah.
and
So
lots of people get rich during crises. So we could, in theory, be the next batch of guys from The Big Short, where we get it exactly right, and we make
we've been waiting
life-changing
a
money.
long time for
We
that
have
one, John.
indeed. Yeah, it's been well, that thesis really applied to before the last
Mhm.
housing bust. So that was the thing that made a lot of sense in
Yeah.
2003,
Uh-huh.
and it's become more and more likely going forward. But I really thought that we were done when the housing bubble burst
Yeah.
and
Same
all the
here, man.
derivatives had to be bailed out. I didn't think we could make it past that, but we did.
Barely. I mean, we were
Yeah.
pretty close to, you know, they say like the food trucks, the trucks that bring the food to your supermarket, because the banks no longer trusted letters of credit, right? People don't realize how serious it was. We were 3 days away from like the food not arriving at the supermarkets, right?
Well,
And
that's
the
what the
Fed
big
stepped in and backdropped all those letters of credit. And then we were like, oh, okay, everything's fine now, right?
well the big banks told Bush
Mm.
that we were 3 days away from martial law, and that's how
Yeah.
they got him to bail out all the big banks.
Hmm.
But you know what? It still would have been worth it. We would still be in so much
Yeah.
better shape today if we'd said, listen, you guys got yourselves in this mess, you guys get
Hmm.
yourselves out. If Goldman Sachs needs to go bankrupt, so be it. That's just a change
Yeah.
of ownership. It's still, all the computers are still there, all the office space is still there. So let it happen. And so JP Morgan Chase, Berkshire Hathaway, AIG, Bank of America, they all would have ceased to exist.
Yeah.
And the world would be vastly healthier for
The
it.
world would be a
Yeah.
better place,
Oh my
right?
God. Oh my, it would be so much better because we would have learned a lesson. We would have learned that, yes, you can indeed
You're
blow up the
cracking me up,
financial
John.
system. Yeah.
I agree with you, but you're
Yeah.
cracking me up
Yeah.
because it's so freaking true.
You
And
think Carrie, you think YouTube allows somebody to say that?
Yeah, that's
Okay,
okay.
good. Okay.
Economic implosion, hey, end of the world, post-apocalyptic, dystopian future. They like that stuff. And you get extra play for that. But when you tell the truth about certain matters, then you're virtually guaranteed that you are going to be obliterated from the platform. Now, I've only been partially digitally re-educated, and they've upped the ability to attract more subscribers a little bit. And I'm just, how do I get them to believe that I love Big Brother? I don't know how to do it here. Should I send them an email, or should I just go to the headquarters and say, I love Big Brother? I don't know what to do.
Yeah, I don't know what either, because you haven't proven yourself to be a good team player in the past. And
I
so
don't know what to do.
I think it just takes time. When you betray the trust of somebody who has power over you, then it takes a long time to regain that trust. So, Carrie, you're just gonna have to grovel. You just grovel and censor your interview subjects as much as you can, and eventually they'll let you back in the club. So.
Maybe. It's all a big club, and we're not in it, John.
We might be, though. I think the gold bugs are the next capital allocators when the time comes.
Yeah.
So it could be us calling the shots.
You'll have a bank. You'll be basically, your stack will become a new bank. You will charter banks with your stacks. Hey, so stock buyback blackout here. Please explain what the heck that is, because I missed that story.
Well, there's stretches when corporations are allowed to buy back their stock and stretches when they're not. Usually, I think it has something to do with earnings season, right? So after they've announced their earnings, and after enough companies have announced earnings, the blackout is lifted and companies can go back to buying their stock back, which is a big driver of share prices. When you've got big corporations borrowing billions of dollars and just turning around and buying stock with it,
right?
That's a lot of accumulation, of course. And so people are thinking it'll happen again, and it's a reason to own equities going forward. But what company in its right mind is buying back its own stock in this market? I guess I could see if you're like a precious metals royalty company. Okay, you're cheap. This is the best part of the cycle for you. You usually come roaring out of bear markets for junior mining equities. So I could see them buying back their stocks. But if you're just a regular company and your stock has been going up for the past 10 years, and interest rates are now really high, and the economy could easily tip over into a recession, how do you justify to your board of directors borrowing a bunch of money and buying back your stock at near its all-time high, heading into a recession? You'd think that would be a tough sell for a CEO, but we'll see. Maybe corporations are that dumb. And actually, what am I saying? They are definitely that dumb, So it could just be that they display their stupidity one more time before everything blows up on them.
Well, let's not forget, it's not a question of whether their stock is a good buy or not. It's a question of, can they buy enough of their stock to reduce the supply enough to raise the price to the point where it triggers their bonus provision. That's what stock buybacks are about, right?
Well, yeah, it is what it is. And don't forget, a lot of them own a lot of their own company stock. So they make money directly.
Yeah.
When they funnel taxpayer money. Yeah. Oh, yeah. They have options that have a certain strike price and a certain expiration date. So that kind of colors their perception. But which is kind of a shocking thing when you think about it. It used to be, we used to think that for CEOs to own stock in their company, that's good because it aligns their incentives with shareholders.
Mm-hmm.
But when you got these option grants and everything, and they're borrowing money, which is basically using shareholder money to buy back stock that allows them to cash their options out at big profits, then you're not really that aligned with shareholders anymore in the long term, right? You're going for short-term profits.
Right.
using shareholder money that the company has to pay back in the future, which means it comes out of shareholder profits. And you will be retired at that point when the debts come due. So yeah, they basically CEOs and the regulators that they own have figured out a way around the whole aligning shareholder and CEO interests thing. Now they don't have to do that anymore.
Amazing, huh?
Yeah, nothing is really surprising anymore in this world.
But John, when we grew up, and you and I took Economics 101, they said that the principal purpose of the public securities markets was to raise and allocate capital to worthy companies seeking to expand, right? What the heck happened?
Well, they've redefined expansion to raising their dividends and buying back stock. Those are now investment activities for a company. So basically, you basically just funnel that money. Well, yeah, you should. I mean, you should be able to buy back stock because there are times when that's a great idea. For instance, I have a lot of beaten down miners that should be buying back their stock right now.
Yeah, they would buy it back and then they'll sell it again at 5 times, 10 times, 100 times the price, right?
Yeah, but buying back, borrowing money and then using that money to buy back stock, that you as a CEO are not obligated to own for the life of the bond offering. Okay. Like if you had to own the stock until the bonds mature and are paid off, that'd be one thing. But if you can just borrow money, boost your stock options, cash those options out, and then let the bonds run for another 5 years before they have to be paid, before they mature and have to be bought back, then that's not a good thing. It doesn't seem like that is aligning your interests correctly. So we'll see.
So I'm going to share with you a book that I once read, and I don't remember the exact title, but it was basically called How Companies Manipulate Their Financial Statements. That was the effect of the name. And it talked about all these different ways that they hid losses and inflated profits that were legal under then accounting rules. I know it's changed. That book's 20 plus years old. All right. But this is what it's all about here. So the number one way to manipulate your share price is to have less shares. So the denominator is less. So or the numerator is less, I guess. So your per share profits get inflated, and then the share price gets inflated, right? Because in theory, your share price is trading at a multiple of earnings, right? It used to be 10 times earnings. That was average company, but we're way past that now, 30, 40, 50, Tesla, who the heck knows? So that book is like must reading, but it needs to be updated. I'll tell you that, because there's like nothing real about these markets anymore. It's all fake, John. It's all fake.
Well, yeah, companies have always tried to manipulate earnings that they report. You want to lower your earnings when you're talking to the IRS, and you want to raise your earnings when you're talking to banks and shareholders, right?
Yeah.
So, and there's lots of accounting ways to do that. And
they keep two sets of books.
Yes.
You have to realize every publicly traded company keeps one set for the shareholders and one for the government, and that's all legal, and it gets reconciled on the balance sheet as deferred income tax. Okay, well, that's how you know.
Well, the funny thing is that Trump is indicted, and he's in court. He's being tried for exactly that, for presenting different numbers to different people. So the whole rest of corporate America is watching this and going, "Whoa, wait a minute!"
Crapping in their pants.
Yeah, Jesus, isn't that exactly what we do? Calling in their accountants and going, "Hey, wait, we do exactly this thing, right?"
I thought that was legal. I thought it was legal. What the heck is going on here, man?
Head of accounting, you told me I could do that, and I'm going to roll on you in court if you. Yeah,
man. Like, what's
Yeah.
the world coming to here, huh?
Yeah. But anyhow, with share buybacks, that is exactly what they do. They take stock off the market and retire it so that earnings per share go up. But if you're using corporate cash flow to do that,
Yeah.
then that's defensible because it's it's the company's money. The company earned the money, and
Right.
if they think their shares are undervalued, so be it. But if you're using borrowed money that your
Mhm.
future shareholders have to pay back, that's kind of a different thing, I think. And that's where the trouble starts, and that's what's happening. A lot of
Yeah.
companies, especially when interest rates were effectively zero for big companies, they could borrow at basically zero, buy back their stock, and then not have to pay the 3% dividend on that stock. So it was a cash flow positive
Hmm.
financial engineering operation.
I love it.
And that's, but
I love
yeah.
it, man. What's wrong with that? Hey, everyone does it, right? But everyone does it.
Yeah. Yeah, everyone does.
Everyone does.
Everybody except Trump now,
Yeah.
because he's going to jail for it. Yeah.
Yeah. It's just good business, right?
Yep, it is. It is.
Eesh. All right. Well, I think we're done for today. We'll be back in 2 weeks. Again, I urge you, go to John's site. It's rubino.substack.com. You're going to find material you're not going to find anywhere else on the web. Our site, of course, financialsurvivalnetwork.com. Email address, contact us, kl@kerrylutz.com. And hey, if you got a good question, we will go over it and give you attribution, to your first name and see what we think about it. All right, John, 2 weeks. We'll see you then.
Take care.